If you started dividend investing 5 years ago, this is what your account could look like today. My personal dividend growth portfolio that I update every single month on this channel has now hit a total value of over $230,000. It generates over $5,600 of high growth annual dividend income. And even if I stop investing today, I've built a compounding machine that will continue to grow year after year after year. In just 5 years, I built a foundation for my financial future. But it wasn't always like this. I started sharing this account on YouTube 5 years ago when it had just hit $30,000. And you can go back on my channel and watch me build this account month by month. In this video, I'll be revealing my $30,000 dividend stock portfolio that I've been building since January of 2020. So stay tuned as I show all 50 of my positions and my dividend income thus far. Welcome to the first episode of Dividend Data. My name is Zach. And I haven't seen this in a long time. That was kind of cool. When I started this channel, I was only 5 months into actively investing. And I'll be honest, I did not really know what I was doing at the time. I was a junior in college, and it was actually my dad that introduced me into a dividend growth investing strategy. And it was around this time that started to click in my mind that you can actually just buy ownership stake in some of the best companies in the world, and they will pay you via dividends a portion of their profits. And for me, it was dividends that was my gateway into understanding that when you're buying stocks, you're buying an ownership stake in a business. And the idea that you could invest your money to then get passively earned dividend income, which if you invest intelligently can actually grow far outpacing inflation and even grow faster than most people's actively earned income. And if you're wondering, yes, I did make these charts even back in my first video. And here you can see I just had at that time my highest month of dividend income, which was around $86. And if we take a look at my dividend income now, I'm earning on average every 3 months $483.25. And I'm even starting to have months where I earn over $600 in dividends. And now my portfolio is worth over $230,000 with $89,000 in total return. That's 62.87%. And this journey from $30,000 to $230,000 is obviously not all gains. I've continued investing more money month after month, and that's been a big part of getting this snowball effect rolling. You may be watching this video and say, oh, I wish I started back then when you did. That was 2020. It's different now. You can't get returns like that anymore. Well, the reality is people were saying that same thing back then. It was actually way worse. We were in the middle of a pandemic where people were freaking out. People saw their account values drop 30% in a month. At any point in time, there will always be bearish people. But if you're starting investing now, the number one factor in investing returns is time. Time is the number one factor. You have to get started. And newsflash, you won't be an expert when you start. And you can spend years and years in analysis paralysis trying to learn more and more. But at a certain point, you just have to jump in with your 2 feet and start. As I stand here now 5 years later and I go back and watch this initial portfolio update and look at my portfolio back then, I had no idea what I was doing. I was a few months into investing and I had a big list of dividend aristocrats and kings that my dad had compiled, but I didn't actually know what most of those companies even did. And then all of a sudden we had this pandemic crash and I was just scattershot buying all of these dropping stocks at a deal. And my portfolio was so unfocused, it was a complete mess back then. I had over 50 stocks in my portfolio, most of which I didn't know much about. And for context right now, I have only 10 stocks in this dividend account, despite it being much larger. And now I actually have a great understanding of the business and the financials of the companies I'm investing in. But that's not going to happen for you right away. Investing is a process of continuous learning. I expect 5 years from now, I'm going to be far, far smarter about investing than I am today. Also, for those of you who are beginners, everything starts small. This is true with investing and it's true with business. I had many stocks in this account that were only $100, and you likely only have a limited sum to invest anyways. But you have to start. This YouTube channel, when I started it, it only had 2 subscribers. Nobody knew anything about it. I posted my first videos just into the void. Nobody watched. It took 10 plus videos getting under 100 views for it to get any kind of traction. But things start to snowball from there. Now I have a channel with 165,000 subscribers. You build momentum. The same is true with investing. You can see my dividend portfolio growing over time. It took me a long time to get those initial $30,000, but it continued growing and growing from there. And also, when I first started investing, I wasn't even that good at it. I underperformed the S&P 500 on the dividend account for the first few years, but I kept learning and learning, making adjustments, and now I've slightly beaten the S&P 500 total return over the past 5 years. And I expect it to continue getting better and better. And I did that with a higher dividend yield, faster dividend growth, and more reliable dividend payments. Oh, and by the way, when you include all of my investment accounts outside of my dividend portfolio as well, I beat the S&P 500 by an even greater amount. Growing your portfolio will take time. And that's true with really anything worth doing in life. With this YouTube channel, there was weeks and months and even years of nothing. And now millions of people have seen the videos, and I'd like to think that I made a positive impact on thousands of you. I documented my entire intellectual journey of learning about investing, and you've got to watch me transform over time. And not only did I build this portfolio and community, but I built this entire research tool where you can track your portfolio and analyze the financials of the actual business behind the stock. This is data I could only have dreamed of when I was starting. It is actually really cool to think back to me 5 years ago making that first video and think about what would become with my investing, our community here on YouTube, and this entire research tool that I built. I didn't know any of this stuff 5 years ago. I taught myself the same way I taught myself investing. So in today's portfolio update video, let's continue this walk down memory lane. I'm going to provide a look at my dividend investing journey over 5 years and the key lessons learned. On top of that, I'll provide an updated look at all of my current stocks, the dividend income my portfolio generates, and the latest companies I've been buying over the past month. But first, I have a special deal that I have to let you know about. The summer sale for dividenddata.com starts today. You can get 50% off our annual membership and lock in that discount price for life. This is the best price we ever offer. And this is the same tool I use throughout my videos to track my portfolio and help me find better dividend stocks. It also has this new AI analyst that is just awesome, where you can ask any financial question and it's filled with actual verified financial data and documents. You can do things like summarize earnings calls right as they happen, screen for stocks based on provided financial metrics, and there's hundreds of different variables you can screen by. You can look at the historical dividend yield of companies and their total return. And that really is just scratching the surface. With this tool, I built everything I need to help me find better investments and then track my progress towards financial freedom. I take investing seriously, and it's a big part of my financial future. So I think a high quality tool that helps you with that more than pays for itself. So click link in the description and pinned comment of the video to take advantage of our summer sale where you can get 50% off annual membership. But this is actually the best deal I've ever offered. On top of this, if you sign up for the summer sale in the first week, you will get access to my Master Dividend Investing in 7 Days course. I spent a lot of time this past month compressing 5 years of investing knowledge into one package. I get asked a lot about my investing strategy, how I think about stock analysis, and what are some potential good companies to invest in right now. And this ranges from beginner investors to intermediate people looking to get more information. But the reality is I don't have time to answer everyone's questions. So that's why I spent a lot of time this month making a Master Dividend Investing in 7 Days course. I compressed everything I learned in my first 5 years of investing and tried to explain exactly what you need to get started. I put a lot of work into this and it is well worth it. So if you buy the summer sale this week, you get for free this entire educational product, which includes a 90-minute video lecture where I go through my entire strategy. And then you get a 67-page report where I go through different aspects of everything you need to know. That includes a getting started roadmap, my stock analysis framework. And this is probably the most important part. I give you curated lists of top dividend stocks. That includes top 10 dividend growth stocks, top 10 high yield dividend stocks, top 5 dividend aristocrat stocks, also top 5 dividend ETFs. And the reason why this is great is it gives you a foundation to start from. I told you, I tried to compress 5 years of investing knowledge into one simple solution. And I wish I had this as a foundation when I started. And that's why this is the best deal I've ever offered on dividenddata.com, because you get 50% off for life with that free educational product that I put a lot of work into. And by the way, you're the first people to get access to that as well. Oh, and if that's not enough, there's a 30-day money-back guarantee, so there's really no risk in trying it out. Feel free to try out dividenddata.com. The link is in the description and pinned comment of the video, and you should sign up right now because only in this first week can you get the Master Dividend Investing in 7 Days course for free with the summer sale. So that's enough of that. I know I spent a lot of time on it, but it is very important. But hey, let's roll the intro video and jump into this portfolio update. My name is Zach. This is Dividend Data. You should leave a like and subscribe to the channel if you enjoyed the video. As I mentioned, I've been doing these portfolio updates for 5 years now, and you can go back and see how my investing philosophy has changed over time. And this has actually been really good for holding me accountable to my own investing strategy and continuous learning. So I hope a lot of you have found value in this over the years. So today we're going to take a look at my current portfolio and its projected dividend income and how much dividends it's actually been paying me recently. But I'll also go back and look at my first portfolio update and take a look at some of the key lessons and differences from that time versus today. And if you stick around to the end, I'll provide some of my latest buys that I just had during this month. So right now, my dividend growth portfolio has a total value of $230,770. I've invested $141,689 into the account to fund it. And this was progressively over time. It was not all at once. My total return, including dividends reinvested, is 62.87%. And in this account, I actually have a very low amount of stocks. I have 10 distinct holdings. Number one is Visa at $57,000 with a 45% total return so far. I built up a lot of this position in 2023 and early 2024. Below that, I have Microsoft, ticker symbol MSFT. I have an 80% total return on that stock, and I built that up a lot during fall 2022. And I actually added to this recently a good bit during the tariff sell-off. And these two companies are core pillars of my account because they are extremely high-quality dividend growth businesses. The yield for both of these companies is low, but my main objective is long-term total return. As I may have implied earlier, I'm still fairly young. I'm 26 years old, so I have a long investing time horizon. So my dividend growth investing strategy is really trying to strike a balance between reliable growing dividend income and total return. I have the goal of beating the S&P 500 over the long term. And a big part of that is investing in high quality businesses that are growing their earnings and free cash flow over the long term. As an example, Visa has high growing earnings. It's an extremely dominant business model with an economic moat. It's a money printer. They have very high margins. Their net margins are 54%. The company's a free cash flow machine. Their free cash flow per share has grown at a 15.83% 10-year compound annual growth rate. And the company's built to continue scaling as they have a constrained cost structure. So for the most part, as their network continues to grow, their earnings and free cash flow will as well. And that means they will be able to pay growing dividends well into the future. Visa grows their dividend payment on an annual basis. The 10-year compound annual growth rate of Visa's dividend is 17.26%. The dividend is still very sustainable with a 22% free cash flow payout ratio and 21% net income payout ratio. Their most recent dividend increase was 13.46%. And just to add some context here, in the 5 years that I have been investing, Visa's dividend has increased 96%. It's nearly doubled. So what that means is when we look at my portfolio and you see Visa generates $368 of annual dividend income, 5 years from now, that will likely be over $700 just from dividend growth alone. So Visa is an example of a dividend growth stock in my account. I also, though, have some high yield dividend stocks as well. But here's the catch. They are still reliable dividend payers with growing dividend payments. As an example, we have the Altria Group, which is my number one dividend payer. This company pays me $2,320 in annual dividends. And I've owned this stock for many years, reinvesting dividends. So I've earned 104.69 shares from dividend reinvestment. I call these DRIP shares. And when you include that, my yield on initial cost is 11.65%. So for every $100 I invest in Altria, I'm getting paid $11.65 annually. And as we go and look at Altria's dividend payment, that will only go up because they are still growing their dividend payment every year. The Altria dividend is growing at a 5-year compound annual growth rate of 3.96%, and it is sustainable with a free cash flow payout ratio of 80%. But with these high yield stocks, dividend growth is only one part of the equation. You are also reinvesting this dividend income every single time you have a new dividend. That allows you to buy more shares of the company, increasing your future income, allowing you to buy even more in the future. That's a virtuous cycle we like to call the dividend snowball effect. As an example, last month I earned a $570.19 dividend from the Altria Group that I reinvested, and that got me 9.68 more shares of the company. ExxonMobil is another example of one of my great dividend stocks. I've held this stock since 2020, and I bought it at a great time. And you can see the snowball effect that's happened since then. I have 31.2 shares derived from dividend reinvestment. And overall, I have a 206.7% total return on my investment. I also have some new high yield dividend payers like MPLX. This company is going to pay me $779 of annual dividend income. I have an 8.06% dividend yield on cost. And I had just reinvested my first dividend from them, which got me just under 3.7 more shares. And not only is this a high yield company, but it's high dividend growth as well. The dividend's grown at a 10-year compound annual growth rate of 8.84%. Their most recent dividend increase was 12.53%. And I look forward to doing a full stock review on MPLX soon. So subscribe to the channel if you want to see that. That will be happening in the month of June. And right now, my portfolio has an annual dividend income of $5,617. That's $1,400 every quarter, $468 every month, $15.39 every day, and 64 cents every hour. And here you can see the projected income month to month. This June, I'm expected to get just under $400. And then in July, it will be $607. And then in August, $404. And if you've been following the channel for a while, you know my dividend income just jumped because I added these oil and gas midstream companies that have very high yields and high dividend growth. I'll be doing stock reviews on each of these this month. And it will be very interesting to compare over time this June month versus this August month, because June has these lower yield, higher dividend growth big tech companies, and August has those higher yield stocks. So it'll be interesting to see how these snowball and compound over time. I have a feeling the August month in terms of dividend income will far exceed it. Here you can see my earned dividend history over time. Since I started the account, I've earned $17,600 in annual dividends. Last year, I earned $4,474. So far in 2025, I've had $2,162. I think by the end of the year, I'll probably cross 5 or 5.5 thousand. But in 2026, I think we'll hit a pretty sizable jump in dividend income. And that's because I've shifted my strategy over time. Originally, I had a lot of high yield companies, but they were slower growth and often lower quality with declining stock prices. Since then, I switched into higher quality businesses, which has had better total returns and allowed me to catch up and even beat the S&P 500 while still growing my dividend income in that time. But now I found a few high yield stocks to boost that dividend income up a little more. And the kicker is I think it will still do very well in total return. And during May was the first time I got paid by those stocks. MPLX, that was a $191.30 dividend. HESM was a $124.22 dividend. And EPD was a $74.78 dividend. And as we go back to my initial portfolio update and see basically the starting point for this account, it was very different. I was spread thin in so many companies that I was low conviction in because I didn't really know much about the business. And I certainly did not have as good of an understanding of the actual businesses and financials behind the stocks. Dividends are often downstream of the earnings power of a business. And I found that zooming out and looking at data visualizations for these really help you find trends of the actual companies growing over time. So originally I had over 50 stocks in this portfolio and I trimmed it and trimmed it and trimmed it over time. And each time that was to allocate into a high conviction company that I knew I would be owning for decades to come at what I thought was an attractive valuation. And this brings up really two key lessons that I learned over my 5 years of investing. And one, that's you need to actually understand what you are investing in. Ultimately, it's all about the business. When you're buying a stock, you're buying an ownership stake in a business. And over the long term, the value will reflect that. So you need to look and analyze the financial strength of that company, but it also helps qualitatively to actually understand the business segments and how the company generates their revenue and profits. This is a core part of investing in businesses. And I found the AI analyst over on dividenddata.com to be a lot of help in this research process. So the number one lesson is that you need to focus on things you actually understand. You can do great just focusing on the subset of businesses you get. You don't have to make money in every single game. And likewise, when you find something you understand and think is high quality at an attractive valuation, you shouldn't be afraid to go big. I went very concentrated into some of the stocks that were my best investments, whether it was ExxonMobil, Altria, Microsoft, Visa. But I'm going to put a big warning on that. When you're starting out, you're going to make a ton of mistakes. And newsflash, me right now, 5 years later, I still make mistakes. The key is to keep learning and adjust when you make an error. I had a ton of bad investments along the way, whether it was AT&T, Disney. I mean, some of my longtime viewers, you know the list. But you have to keep learning. Of course, you don't want to make mistakes, but it's all part of the process. And you can't let the fear of making mistakes cripple you from starting. Because starting and the amount of time that you end up investing is the most important factor. Time is the friend of the long-term investor. So also for us younger investors, you have such an advantage with time on your side. That's why I'm so optimistic and look forward to see how this portfolio that I'm building will continue to evolve over time. I have decades and decades and decades of compounding ahead. I'm glad you guys got to take a little walk down memory lane with me and reflect over 5 years of investing. As promised, I'm also going to share my latest buys that I just had during the month of May. It was a good amount of stocks, but it was definitely not as much as the months prior during the tariff sell-off. I was loading up on investments then. I bought 9 more shares of Alphabet, ticker symbol GOOGL. That's the parent company of Google. That was at a cost per share of $150.99, which is a great deal. In hindsight, I wish I bought a little bit more, but I did buy a ton during the tariff sell-off. I now have 156 shares, and it's the 4th largest position in my dividend growth stock portfolio with a value of $26.8 thousand. I look forward to this being one of my core positions moving forward. I also added more to some of my oil and gas midstream stocks. As an example, ticker symbol HESM, I bought 10 shares of that at a cost per share of $36.87. Both this and MLPX are some of my newer positions, and I'll be doing stock review videos on both of those this month. So subscribe to the channel if you want to see that. So as I wrap this up, I just want to remind you guys that our summer sale just started where you can get 50% off annual membership to dividenddata.com. This is the best deal we ever offer, so get it while it lasts. And if you buy in the first week, you get this great crash course I just made. It's called Master Dividend Investing in 7 days. It has everything you need to get started. That includes my stock analysis framework and top stock picks so you can have a list of curated companies to start from. Click the link in the description and pin comment of the video to get access to the summer sale. With that said, I'll see you in the next video.